Hey guys, welcome back to the Capital Mindset Show. Today's going to be a different style of video, macro mixed with strategy or strategy for the portfolio. So it is of no secret now that I've already been shifting over towards a more bullish outlook or kind of more aggressive take on acquisitions. And I think that I think this video is necessary because while I have stated this in live streams and the Discord calls and Discord text communications, as well as in comment section communications, and as well as in some videos dedicated to other stocks, this needs a dedicated video, and that's what this video will service. So for those of you who are new to the channel, you can check out the content library. It should be in the description below. It's basically a spreadsheet that allows you to kind of navigate through the channel without using those pesky playlists on YouTube, and you can actually see all of my previous thoughts, okay? So as well as kind of this video, you can see previous portfolio updates. This isn't really a portfolio update, although I will be updating you on different moves that have been made. The portfolio will update tomorrow. I have it set to update on Friday, and so it will show the new moves, and I will just discuss a little bit about it today, okay? So starting us off, I want to just say from the context that I don't currently see myself as a YouTube content creator. I see this as my pastime. This is how I kind of get my fix of talking about stocks all day. And if you ask my wife, it's a good fix to have, I guess, because it allows me to kind of document my thought process. And also where I currently work, it was discussed that this would be a good way to actually share and document my thoughts in a ready or easy manner to kind of visualize in the future and look back upon, okay? And wherever I go, I can kind of showcase this as kind of my vlog of sorts. So with that being said, I want to actually state about the current state of YouTube finance or YouTube finance creators. They're now all talking about the liquidity crisis, all this jazz, real estate, blah, blah, blah. This is nothing new though if you've been watching the channel. We've called it here the liquidity crunch. And if you guys are a longtime viewer of the channel and you want to vouch for this, you can comment down below and say for yourself, have I been talking about this for quite some time? If so, say yes. If not, you can feel free to say so. Of course, I reference the YouTube content library where you can find all the older videos. Now, I have been getting better across time at creating dedicated videos because, you know, before I would make very large videos about one topic and have little snippets here and there about other topics. And that makes it a little bit harder for people who have lives and don't have enough time to watch an hour-long video about, you know, a stock to have, you know, little tidbits of information regarding macro or other stuff. So I'm getting better in creating these dedicated videos. So this dedicated video is just simply to document my thought process change and how I have been becoming more bullish. But this is not new information. Nothing really in this video is new information aside from the portfolio changes that I will outlay later in this video. Okay, so with that being said and that context laid out, I want to then continue into the overall topic. I think that for the most part, the liquidity crunch, again, that we have been talking about since about end of November, December, and January, February, all the way until now really, is kind of we're in the midsection to the tail end of it because I kind of see that and this is actually a comment or a response I have to someone who asked me this question. I believe it was either in the Discord or in the comment section on a video. I forget, and I apologize for that. But regarding how do I know we're at the tail end of something? The answer is it's very difficult to tell when you're at the end of a bad situation, and it's much easier to tell when you're at the beginning of a bad situation, if I explain myself well. It's very difficult to know that you're at the end of something. So one way to do it is to kind of gauge sentiment, because markets are forward pricing mechanisms. They're not completely stupid. So it's not that I'm just saying that today is the bottom, or tomorrow's the bottom, or next month's the bottom, or 2 months from now is the bottom. What I'm saying is I am voting with my dollars, and I am acquiring greater and greater sums of assets. That's my strategy. What I do with my money is not something that you should do necessarily with your money. This is a market. So we all have differing opinions, varying opinions, etc. And that can drastically change the outcomes, right? And, you know, this is me just saying I'm liking what I'm seeing. I am buying more, while most people, I guess, now are kind of realizing that we just went through a liquidity crunch, or as they call it, liquidity crisis. And now I think that that's been identified, we're definitely not in the beginning. We're again maybe in the middle or the tail end. Okay, if we're at the tail end, this video will age like fine wine very soon. Okay, if we're in the mid section, this video again will still age good, but towards later time in the year or maybe 2 years. Okay, so what all that is changing is my shift in strategy. And I also had a comment that was asking, well, are you timing the market? No, not necessarily, because timing the market implies a statement of most efficiency. So I'd rather sell everything today because I know somehow that the market will fall by X% in 2 weeks from now, and I'll just buy back then. Well, when another scenario is you have 50% allocation and 50% allocation to cash, and you kind of are still invested, you have exposure, but then now you're more aggressively deploying that cash. That's not necessarily timing the market, and that's basically what you're looking at here. And I actually can vouch for this, that I've been doing that, right? I have been building out positions throughout the liquidity crunch. It hasn't stopped me from building out some positions. You guys know this if it just reference the YouTube library catalog. You can see all the videos. I mean, I'll just shout out some names that I was able to build out further. Facebook was one company that we were buying throughout this liquidity crunch, and I was able to build out the position. I actually ruined my cost basis. I've talked about that here and there, but I've ruined my cost basis on Facebook a little bit. It was lower now, but I was able to build out the position. I took advantage, and I thought I was acquiring it at good, decent prices. Another one was Netflix, and I was able to purchase Netflix during this liquidity crunch. Technically, I also bought Bank of America during the liquidity crunch. I bought Thor during the liquidity crunch, very small position technically. Magna International also purchased during the liquidity crunch. We also have, I guess, in terms of, well, I'm just looking through it right now, and I'll actually showcase the portfolio soon. But, well, I'll showcase the portfolio now. And you guys can probably identify a lot of, not a lot, but some stocks that I was acquiring during the liquidity crunch. So it's not that I'm saying I'm not acquiring anything and I'm just going to sell everything out. That would be a sentiment of timing the market. No, that's not at all what happens. I talk about strategy shifts. For example, I don't consider the fact that I sold all my banks and I sold all my REITs and I sold, I think, Walgreens as well and Palantir as well as a form of market timing. I don't think that. And if you actually take a look at the past investments tab, I say that you guys can dismiss it because the portfolio was not public and I did not make videos specifically on that. Back in the day in 2021, I would talk about it, I would reference it, but there was no sense of necessarily documentation. And the only one that actually I shared documentation was a Palantir, but I didn't do so with any of the banks. Okay, I've talked about it, but nothing else. So you can just dismiss it. But the point is, let's talk about that situation in particular. There was a strategic shift that kind of occurred, and that's basically it. There's actually one REIT that's missing in there. I just noticed it. ADC is missing in there, but I don't really care. I only care about going forward, if I'm being honest, because I think going forward is more interesting. Of course, if I were to show my prospective employer, I would just give them my brokerage statements, and that's about it. But for this is public on YouTube. I don't want to disclose that kind of stuff. But regarding that, and again, if that bothers you, I apologize, but this is my vlog, and so I do what I do on my vlog. If you find the information valuable, you find it valuable. If you don't find it valuable, well, you don't find it valuable. You know, that's is what it is. And for those of you who appreciate that, you can appreciate it. So, kind of going back to this. It was a strategy shift. It wasn't timing the market or any stretch of the imagination. It wasn't anything like that, okay? It's strategy shift. I got out of specific kinds of assets, and actually it turns out that getting out of the REITs was not as good as I thought, by the way. So fun fact about that. And in fact, I would have probably been okay just holding those and probably earned some dividend income. So, but it was okay. I got cash. Some REITs, though, did, however, play out as I expected. The REITs such as industrial REITs, those actually played out kind of as I expected. So I'm on record, and that's kind of aged kind of okay on the REITs part. I had a comment saying that, oh, I should have listened to you about the REITs, and this was after my videos about the liquidity crunch. And so I was like, that didn't age as good. Depends on the REITs type you really think about it. So industrial REITs, other kinds of REITs, those did. Medical property REITs actually came down a lot too. So they were actually victimized by the liquidity crunch, but not so much the triple net lease commercial REITs. Those actually kind of weathered the storm rather well. And actually in discussion with subject matter experts on that matter, I actually learned something a little bit, and I actually would share. I've shared this in the past, so again, this is not new information, but I'll share it again here, is that when you look at commercial REITs or commercial property REITs, especially in the creme de la creme of that sector, when rates go up or when there's a liquidity crunch or liquidity crisis, they actually have less competition in terms of property acquisition. And then so if they're not egregiously overvalued, it doesn't necessarily mean that they're going to come down. I have talked about how rates don't necessarily correlate exactly with prices of REITs, and I discussed that in a REIT video. You guys can check that out. It's definitely it's probably in the catalog. If it's not, I'm going to work on getting that into the catalog, because I just realized there is a video that's really good on that, and I actually showcase the correlations between REITs and rates and stuff, and it's actually a misconception because traditional thinking thinks that rates actually are a rock or a weight on REIT performance, not necessarily. And so I found that out also again in this practice here. So also I want to highlight that yes, 2022 has been a difficult market, but there have been a lot of winners too. For example, in the portfolio, we have LYB. LYB's been a great performer. That was acquired at the tail end of 2021. Look at the performance at it, right? There's a video on LYB on the YouTube channel. I think it was posted in December. All right. And so the company, I'm pretty sure it was acquired in December, it's performed really well while the market was down. We also have other companies like Cardinal Health. Cardinal Health, same thing, was acquired late last year. It has performed. It's gone up while the market has gone down. Okay, so they've served these purposes. Activision Blizzard was another one. Fantastic investment there. Of course, that one was because of an acquisition of Microsoft. BHP performed really well. Rio Tinto now kind of performing pretty well. But BHP, remember, we took profits. And same with ConocoPhillips. We took profits on that one too. But ConocoPhillips, again, that's an older investment. So I'm kind of alleviate that one. That one, someone's going to say like, oh, well, you bought that in 2020. Well, I didn't buy it in the drop of 2020. I bought that right after the election of 2020. That was when I bought ConocoPhillips. And of course, we took tons of profits on ConocoPhillips. If you guys remember the original portfolio update videos, which again, by the way, all of it is documented. It is on the library. You guys can check that out. The reason why I created the library is to, for one, make it very easy for people to access older content. And two, because I'm not hiding any content, I want to present my old ideas. That's the whole purpose of this YouTube channel. And to document also evolution of thought over time. So, but anyways, kind of going further, I have been building out 2 new positions, of course, Leggett & Platt and Global Payment Systems. Already done a video on Global Payment Systems. You guys can check that out. That one's done really well, actually. But Leggett & Platt still hasn't gotten its own video. And I've been actually rebuilding my bank holdings, okay? Specifically, I've been only buying Bank of America. Bank of America slightly up. I hope it kind of comes down a little bit personally, but I'm actually nibbling on Bank of America. And actually, I bought, okay, so I'm going to now update everyone because then we're going to finish off this video because I think I've shared all my thoughts. But you will see a change here in the speculative side of the portfolio tomorrow. It should be updating tomorrow, and that will be on Zillow Group. So Zillow Group, I have acquired more Zillow Group, and there's going to be a separation soon between Zillow's allocation and Overstock's allocation, as in Overstock's kind of remaining the same, but Zillow, I've actually acquired a decent chunk of Zillow. And I actually mentioned this last night in the Discord. I was talking to someone. I forget who it was, but it was in the general Discord chat room. And I asked them, well, what stock are you bullish on? They were Zillow. And I was like, oh, it just so happens I've been buying Zillow. But you will see that change updated tomorrow. Anything else on this side that just kind of been buying same old, just here and there, just nibbles. But I'm really actually contemplating heavily building out the Warner Brothers Discovery position and actually bringing down my cost basis, but actually raising the position size and changing it potentially to a core holding instead of a ancillary holding, or maybe a high ancillary holding. It could end up being that too. And so I just want to kind of give you guys the update on that. Otherwise, everything else is looking rather the same. Just checking up on the YouTube stock index. The YouTube stock index actually is recovering a little bit, okay? So we are still, well, this is not a holding of mine. And for those of you who are confused when you see this, this is not my holdings. This is, repeat it one more time, this is not my holdings. And if we actually look at some of these positions, they are actually up now. SoFi's up. BlackBerry's up since we've started recording it. Okay, so we started recording it on the video that actually spoke about this. That is the first day in which all of these prices are based upon, and you guys can check out that video if you're curious, but on like when it started. All right, but on that note, guys, thank you guys so much for watching, and I'll kind of leave it off with the summary of the whole video. Please note that my strategy is shifting away, and while I'm glad that everyone is discovering the liquidity crunch, I think it could be a learning moment for at least everyone. And the fact that the larger YouTube content creators were talking about it, I think will bring more attention to it and hopefully drive greater understanding about these mechanisms. Of course, that does mean that the next time those same measures will not be good. So, but you know, here's to the adventure of it. I think that's all well and good. All right, on that note, guys, thank you guys so much for watching, and I'll see you guys on the next one. Bye.